Clerk, roll call, please.
Commissioner Killeen,
Present.
Commissioner Kniezek,
Here.
Commissioner Clark-Holman, no, I've seen her come in. Maybe she's muted. 1 second.
Here.
Oh, there you are. Okay. Commissioner Dobb,
Here.
Chair Basham.
Here.
Hello.
Yeah, quorum present.
Martha, instead of saying here, you should say there because you weren't over here. Okay. Okay. Next item, Madam Clerk.
B, approval of the August 12th, 2020 meeting minutes.
So
I'll
moved.
move. Yeah, I'll support that.
Been moved by Commissioner Dobb, supported by Commissioner Killeen. Any discussion? All those in favor?
Aye.
Aye.
All those opposed? The ayes have it. Next item.
C, under old business, communication from Marcella Cora, Wayne County Legislative Auditor General, forwarding a letter from Plant and Moran PLLC, the county's independent external auditor.
I'd like to welcome Ms. Cora, our Auditor General, and her staff, and also her guest. Welcome, Ms. Cora.
Thank you. Marcia Cora, Auditor General. We have representatives from Plan Moran here today. If they want to go ahead and introduce themselves, or I can introduce them, whichever would be easier.
I can take that, Marcy.
Okay, yeah, that'd be good.
So Dave Helisek, I oversaw the CAFR part of the audit, and with me again from last week, Keith Shemansky and Nikki Acho from the CAFR side, and Shawana Jackson from the single audit side. So we're all joining the committee meeting this morning.
Well, welcome.
Thank you.
And they're here primarily in case there's any technical questions related to the findings. What I am going to do is I'm going to go through the conditions of the findings and the effect. And then we have representatives from all of the different audited areas that can respond to the findings. I think I've seen somebody from every area, including the Treasurer's Office. So we have Jackie Safransky and Samaya from the Sheriff's Office, Shantika, Matthew, and Yogesh from M&B, Terry Carroll from Health, Human, and Veteran Services, and I believe Soraya is here from the Treasurer's Office, and I'm not sure if anybody else is here. If they are, if they could just speak up.
Welcome to our guest.
Okay, I guess that's who's here. So we're going to start off continuing our discussion on the single audit, which has the findings from the fiscal year 2019 CAFR single audit. So we're going to start on page 14 of the single audit, which is finding number 2019-01. This one is primarily related to management and budget. The condition is that the county's general ledger and underlying financial records were not reconciled and closed in a timely manner. There was numerous adjustments that should have been identified by management, which instead were identified during the audit of the county and the component units. And the effect of this is that if the county had not recorded the auditor identified entries, the financial statements would have been materially misstated. So as I said, this is a finding related to management and budget. I don't know if they have any comments. Matthew? Probably regarding the corrective action that's being taken.
Good morning, Matthew Dubay, Deputy Chief Financial Officer. Management agrees with the external auditor's finding. We've been challenged with personnel turnover and with the number of available personnel to do work like balance sheet reconciliations. And so unfortunately, we tend to only reconcile balance sheet accounts at year end and not more periodically, which leaves us more adjustments at year end, and it's difficult to timely go through that process during the audit. And so the auditors through their audit process will tend to find significant or material adjustments to our books. That process is we're trying to get better every year, trying to get workarounds so that we can identify those areas that need more work before the auditors come in. but it's going to be a continued challenge with staffing levels, and because we can't do monthly reconciliations of our balance sheets.
To that point, Mr. Dubai, I know this is the same comments and questions and concerns that we had last year. Is somebody from the administration at a level to where they can relay this to the exec, the fact that we are not necessarily saving money by having the same staffing problems year after year after year?
I'm sure that the administration is aware of that. I think the challenge is how to allocate resources to everyone who needs it. I think the need is greater than the available pool of resources, and so it's going to be an ongoing challenge for many, many years as to who's going to get how much of the county's limited resources.
Well, to that point, and understand that there is a need, there are things that, you know, I know we had conversation about cars taken home to the sheriff's department. We have conversations about other things. I mean, certainly the administration could, push the Fed for grants, get support from commissioners, do other things, but at some point we have to. And my thing is to try to just fix some things that are wrong, and maybe that's too simplistic. But you know, when you lose talent, you're not necessarily saving money, because some of your new people, even though they mean well, even though they have a college education, don't have the hands-on experience to take over. And so I'm just trying to relay that it's an important year after year conversation we have with the administration every year. And I know it's not, I might be, I don't want to sing to the choir, but it is a concern.
Mr. Chair?
Commissioner Killeen.
Yeah, thank you, Mr. Chair. I just wanted to ask the Auditor General, on all of these findings, I believe, except for the last one, the finding type is material weakness.
Correct.
Could you tell us where on the mortal to venial sin material weakness lays?
It's the highest level.
That's what I thought. And then a little later on, when we get up to like number 10 or 11, they talk about a material noncompliance, a term I don't believe I've seen before. What does that mean, and what does that mean to the feds? Because that's noncompliance with their rules.
Maybe Dave Hellick, yeah.
Okay, so Commissioner Killeen, I could ask Shawana to address that when we get to that part of
Yeah,
that.
I just want,
because that's going to be more along the lines of the federal programs. Clearly, you've read into that, and it's a lot of times it's meeting certain criteria or grant conditions, and really it's complying with them, versus a lot of these that we're discussing now relate to internal controls.
okay, we'll have that discussion when we get there, but just at the very beginning here, before we just started going through 11 findings to establish what the terms mean for this. And I guess it's, Mr. Chair, it's worth also commenting at this meeting that I believe the first 7 findings are all repeat findings from previous years. And I would like to know, as we go through this, how many of those are repeat findings over a 2-year period, over longer, not just last year. So if we could mention that as we go through each one of the findings, how long it's been a finding, I would appreciate that. Thank you, Mr. Chair.
Okay.
Ready to move on to the next one? We're on 2019-02. While the county does have a process in place to notify the bank regarding terminated employees and closed accounts, there is not a system in place to verify that the bank makes the requested changes. In addition, there is not adequate segregation of duties between transferring of the funds within accounts at a specific bank and opening new bank accounts. Well, the effect here. Failure to follow up with financial institutions to ensure proper handling of the request for personnel changes and lack of segregation of duties could lead to misappropriation of funds. And this recommendation was for the Treasurer's Office. And the recommendation is that the treasurer's office should implement procedures to ensure personnel changes are verified with financial institutions to ensure access to is limited to authorized individuals. And they should also ensure that duties are appropriately segregated to prevent one person from having the ability to transfer funds within bank accounts and open a new bank account. And as a best practice, Plant Moran recommends that the treasurer's office implement an online banking policy and review online banking activities. And I believe we have Saraya from the treasurer's office online. Am I correct?
Do we know?
Can you hear me? I'm
Yes.
here.
You may want to talk about the views from responsible officials and the planned corrective action.
Okay, so the actual current process related to any of the online access includes key fobs and access that is retrieved when an employee has been severed from the county. So one of the biggest pieces of having access to any of the banking information is no longer attainable. The conversation to be had with our banking institutions is also just having them actually removed from the system so they're not reflected.
And I
The
believe
audit- Go ahead.
we have it verified back to the treasurer's office that they were indeed removed. I think is there action we're looking for?
Right. I mean, we'll be able to create or process a profile for all of the active users to be able to monitor that more readily.
So is this issue that we had last year?
Yes.
So is it going to change when we have audit next year?
It should it should be improved, but the thing that we'll probably have to have an understanding, I guess, with the auditing process is when a employee is no longer with the county, even if their profile is still shown at the bank, that if the employee has no ability to access or to be able to modify any of the banking credentials, and we have retrieved their fobs, which is a key sign-in feature, and all of the setups are dual authorization, then they would not be able to manipulate any county funds. So their presence on a list is not necessarily giving them access to any ability to have any banking credentials.
So I guess this is why I'm a skunk at the picnic. As I understand it, the auditors do audits per auditing standards. These are national standards. And so, and those conversations probably should have already been had last year or the previous year. If a key fob is not the answer or something else is the answer, that should have been worked out. And so I just, from my point of view, in chairing a meeting for audit, being the chair, I'd like to see next year that whatever feelings that that you have with the if there's a way that you can resolve it with the auditors without having to do it in committee, it would certainly save us a lot of time and would stop us from having a repeat finding. So, I mean, please jump in, Ms. Cora, but you know,
This is something maybe Plan Moran can work on with the treasurer's office as they're doing the current year's audit to see what action can be taken to satisfy the recommendation. I think the second part of the recommendation too was the segregation of duties for the bank accounts. So there's not just one individual. So maybe we could respond to that too. I'll let Dave speak.
Yeah, I was just going to speak to the first item. So, you know, there's controls and then there's mitigating controls that we'd be happy to work to work through, you know, the experience that we've not hit at the county, but, you know, that we've seen become difficult maybe at some of our other communities is not necessarily the controls, and I'm not pointing to any specific bank, the controls at the controls at the government might be solid. You know, relying on the controls which we're not auditing at the institution may not be as solid. So that's the biggest concern with potentially leaving a profile on there. You know, the county's control system may be rock solid with both preventive and detective controls built in, but if there isn't something, you know, a similar strong control structure at the institution you're investing with, there is, you know, potential, you know, regardless of what is set up, that there could be, you know, transactions that you may not otherwise be authorized. And I can just give an example without you know, naming any institution. What I have seen in the past, and it might not be the very recent past, where I've seen a check, for instance, that requires dual signatures. I can tell you more than a handful of times I've seen checks clear with just one. So the controls are all right on the county side or the government side, and you've got the control in there, but, you know, we have seen instances, again, I don't know that we've seen it here at the county, where a dual signature is required. It'll go through with just one. So that's really, you know, what we're trying to address. And again, with any of these findings, you know, we're bringing to the attention, you know, what we think could strengthen the controls, and then, you know, the county and the committee weigh the pros and cons and move forward on that. So that's really where that first one is coming from. But we'd be happy to work, you know, with the Treasurer's Office on any sort of mitigating controls that, you know, would reduce that level of risk.
So I guess my question would be, is the Treasurer's Office willing to work with the auditors to resolve this issue?
Yes, most definitely.
Okay, thank you. Appreciate that. Moving right along.
Mr. Chair, Colleen.
Commissioner Colleen.
Thank you, Mr. Chair. I'd just like to ask the Treasurer's Office, is the fix for this totally within the Treasurer's Office? Are you depending on management and budget or some other county department with regards to fixing this? Or is the fix for this totally within the purview of the Treasurer's Office?
I would say that the steps that we can take would be initiated by the Treasurer's Office, but it's really a question of how the responsiveness, or I guess the reflection that's on the bank records or the institution's profile that they maintain for us is going to be modified. How they're able to change that to be able to adhere to any of the recommendations or concerns that the auditors are expressing. So
who has that list? Who keeps that list?
Well, we maintain it. The thing is that for each banking institution, there is a security administrator, and the security administrators may set up a particular user, and then the user has to be approved by a secondary administrator. So
yeah, I'm not worried about dealing with the bank. What I'm more concerned is, my question really is, are there any other county departments other than the Wayne County Treasurer's Office that have a role in fixing this, regardless of the bank issue that I understand?
No, only on accounts that if there are change of signers for specific departments or something like that, that they need to communicate better.
Is that me?
Excuse me?
Did I go dead?
Probably. We can hear you.
Huh.
You're frozen. But like I was saying, if it was another county department or there's a specific account for a department, then those changes or access within the system just has to be communicated better. But we can definitely make those improvements, and especially looking forward to working with the auditors.
So next year, this won't come up again, correct?
It should not. It depends on the responsiveness of the actual institutions or the concerns that are expressed.
That's what I'm trying to get across. But
Right.
anyway, but thank you.
No problem.
Okay, if no questions, we'll move on to 2019-003. It's where the county lacked appropriate overall monitoring of account balances during the year in order to compile complete and accurate financial records, which has resulted in many auditor proposed journal entries. And the effect of this is, as a result of lack of appropriate overall monitoring procedures, there are many auditor proposed journal entries. The recommendation is the county should develop overall monitoring procedures to aid in ensuring that all activity in the fund is complete, accurate, and logical. This includes assigning an appropriate individual to each general ledger account, as well as several individuals who would be responsible for the entire general ledger and financial statements to perform monitoring, analytical analysis, and adjustments as needed. And this one is related to management and budget, and it is a repeat finding.
Okay, and Mr. Dubay, I'm sure has a response.
Yes, the M&B does not have enough staff to assign balance sheet accounts for monthly review. And so we rely on year-end balancing of balance sheet accounts. The issue with that is, as most accountants will tell you, is that when you're trying to remember what happened 12 months ago, it's very difficult to find errors and to fix them timely. And so with our continued lack of resources, we're going to continue to rely on a year-end process. Every time that the auditors find an issue, we try to make sure that we put additional focus on the following year-end to try and mitigate that. The dollar amounts have been decreasing every year. We're finding more and more items more timely, but this is very likely going to continue to be an issue for years to come.
Okay, and we're getting ready to do our budget again this year. Has anybody from management budget talked to the folks in administration and also our Ways and Means chair to try to get more people to do what our weakness is? Specifically?
I believe the current proposed budget for M&B brings our staffing levels back to pre-COVID, but not to a level where we can assign staff to balance sheet account reconciliations.
Well, it's an issue, and it's an issue that the commission's responsible for as well as the administration. So hopefully we can deal with this before next year and we do audit again. But thank you. Moving right along.
Okay, if there's no more questions, we'll move on to 2019-004. There were instances identified where the county was not in compliance with laws, regulations as follows. These are some of the examples. The county currently has checks outstanding related to both road construction performance, bonds on deposit, and agency fund liabilities that are considered abandoned under Public Act 29, 1995, but have not been escheated to the state. Another example is expenditures exceeded budget amounts in certain expenditure groups within the general fund and several non-major special revenue funds. 2 major special revenue funds ended the fiscal year in a deficit, and 2 non-major special revenue funds were budgeted to the end in a deficit, and there was no budget prepared for the building authority. The effect is the county could be subject to penalties under Public Act 29 of 1955, and the county and Wayne County Building Authority may be required to submit corrective action plans to the state. The recommendation is we recommend that the county implement a process that identifies specific individuals for identifying and monitoring applicable compliance requirements throughout the year, In addition, the county should file a voluntary disclosure agreement when submitting its achievements to the state. And this one is a management and budget finding. It is a repeat finding.
Could management budget respond to that?
Yes, this is Matthew. We've been working towards putting together an achievement process, but as a priority item, it's been a lower priority than trying to deal with our other ongoing operating issues, such as our balance sheet reconciliations at year end. But we're trying to come up with a process that we can do something that gets us closer to compliance. We may not be 100%, but we're going to try and get better at it on achievements. On the Public Act 2 component, where we've exceeded budget. I know we've had a few this past year, but we've been able to reduce the number and the amount of instances where we've had expenditures over budget. Not that there's an amount that is okay under state law, but I think we've made some forward progress. We're going to continue to put some pressure to try and make sure that we don't go over budget in any of the areas. In 2019, we had a number of instances where the budget as approved by the commission and in place to control the county's expenditures functioned very, very well right up until the point where we got to year end and we had to start calculating accruals. And the accrued amounts is what actually put us over budget. And so when we calculate accruals, budgetary controls don't apply because we're required to reflect the expenditure in the period. And so this is an issue that where we've been trying to address to make sure that departments are aware that it's not, if they hold on to an invoice for 6 months, it doesn't positively impact their year-end budget. If it's owed and it has to be reflected in the books. And so we have, we've made a lot of strides in that area. The third response here relates to, again, Public Act 2, but this is having budgets. I've been working with our component units folks to make sure that all of the component units, including the building authority, have budgets. I have not heard back from everyone as to the status of the budgets. I'm assuming that budgets have been put in place, but I'm going to follow up with them and verify that that is true, that all component units of the county have budgets and that they're amended as necessary under Public Act 2.
You know, I guess just taking this from what you're saying, and I'm really paying attention to what you're saying, from a macro point of view, the question I have is, how can a material weakness and material noncompliance and a repeat finding be a lower priority? For me, and just from my point of view, I would think that would be a high priority to not have that. Material weakness, repeat finding, noncompliance be a lower priority.
Of all the high priority items, escheating money back to the state is a lower priority than trying to make sure that we get payroll out on time, we pay our vendors timely, that we deal with some of the other findings that are material weaknesses. And so of all the different priorities that we have, that is one of the lowest priorities. Still a priority, but it's the lowest priority.
Did I get a response from Ms. Cora?
I would agree that that probably has a lower priority over the payroll pay and bills on time, and making sure the financial statements are accurate. But, I think this is something that we need to address because it's been going on, this treatment policy, for several years now. I would agree with Matthew that it's probably lower than the other items he did mention. But we still need to address it.
And management budget does not disagree with the Auditor General on that point.
So next year this won't come in front of us.
Oh, it's the 26th of August today. We've not complied with PA 29 of 1995 up to now. So it very well likely will be a repeat finding next year.
Okay. I've said what I got to say, and
Do we, yes, sir, do we have an idea when we will have our achievement policy in place?
We had a draft that we were working on quite a while ago. It needs to be revised again just to make sure it's complete. And we need to get Corporation Counsel to review it just to make sure we've covered all the bases. And then it's a matter of finding folks that we can put onto this task. Part of the achievement process is that we have to reach out to every individual or entity that is on our achievement list, and we have to make a bona fide attempt at communicating to them that we hold money on their behalf. And then we have to manage that process, manage all the responses, and then either issue checks back to the originating entity if they respond, or if they don't respond, then send the money to the state of Michigan. So it becomes a staffing issue where we have to dedicate resources to this, which we have to pull off of something else. If we have to pull folks off of something else, then that means that we're not doing other day-to-day work that's required.
but is this not required also?
Absolutely. It is required. But of all the things that are required, certain things will get done and certain things won't get done. It's just not possible to do it all. Management and budget's operating somewhere around 50 to 60% staffing levels currently. We've had to cut back on required meeting our state and federal requirements to the absolute bare minimum, and we fail at these items almost every year because we just don't have the resources to thoroughly review everything every year. And so on the fly, we try and prioritize what we can, and the things that we can't get to, we don't get to.
Okay. So anybody else got any further comments on that? Okay, moving along, Ms. Cora.
Moving on to 2019-005, the county does not have a review process in place to effectively identify and capitalize all assets acquired during the year, that all journal entries are properly completed before the audit. The fact is, as a result, the lack of appropriate controls and procedures over capital assets recording, material journal entries were necessary to properly state the year-end balances. The recommendation is the county should develop overall monitoring procedures to ensure that all capital asset activity is reconciled to the general ledger system timely and accurately. And this is a repeat finding, but I do believe it's been getting better.
Yeah, we've made making good strides on this. Unfortunately, this year it's going to be, for fiscal year 19, it's going to be, I'm sorry, for fiscal year 20, it very likely will be worse than in fiscal year 19 because of staffing turnover. We had 2 dedicated resources to capital assets. We currently have both of them. The department lost both of them this year to furloughs and bumping. And so we are further behind this year on capital asset recording and reconciling than we were in last year. So very likely this will be a repeat finding.
Is this something that we believe the ERP system will help us with once we get it in place?
Absolutely. The new ERP system, one of the things that I was working with our implementers on, is when an item of capital asset in nature is being purchased, it's flagged right from the requisition stage and will automatically flow towards the capitalization process. One of the things that we rely on right now is for departments to let us know that they've bought a capital item, which means that every department has to understand the difference between a capital asset and a non-capital asset. And so one of the issues that we've had with capital assets is departments not realizing that there's a difference. And so we have to do a lot more double checking and searching for unrecorded capital assets. The new ERP should make that process easier. It won't eliminate the human aspect of differentiating between capital and non-capital expenditures, but it should make the process more automatic for those that are identified upfront as capital expenditures. The accounting for and the recording of the capital expenditures, we put a lot of work, Yorkshire and I put in a lot of work with the implementers to try and streamline the accounting for capital assets, which should make it easier for staff as they're recording capital assets to make sure that they're capturing everything that they need to capture, and then it flows into the system and then is calculated correctly. We've been, Yogesh, primarily Yogesh and a little bit myself, have spent a lot of time cleaning up capital asset issues in JD Edwards that are 15, 20 years old over the last 3 or 4 years. We keep finding things that were not properly recorded a decade ago, and then we have to try and find ways of fixing it in the system. And so we've made a lot of strides in cleaning up a lot of the bad data that's in our current system, which will help when we transition to the new system. We'll have better, cleaner data at transition. And then the system itself should streamline the process, which should help us in keeping on top of the capital asset recording.
So, and to that point, has management and budget assigned an individual like who's responsible for capital assets, including additions and deletions, those sorts of things?
We had 2 people assigned to that. Both of them are gone. So now we're trying to find somebody and train them.
Okay, thank you.
Moving on.
Yep.
Now we're moving on to 2019-006. The finding is that the county does not have adequate controls in place over approving voided transactions. The effect is failure to have controls in place surrounding voided transactions could lead to misappropriation of funds. And the recommendation is the county should develop overall monitoring procedures to ensure that there's a documented approval process in place over voided transactions, that the controls are in place to prevent a cashier from voiding their own transaction. And I believe this is primarily the treasurer's office, but may have some relation to M&B if we have other voided transactions within the county.
So from somebody from the budget, finance, or treasurer's office like to respond? Anybody from treasurer's office like to respond?
Well, if I may, this is Matthew.
Sure.
We've been working with the treasurer's office for the portion of the voiding that is related through M&B. So if management and budget needs to void a check for some reason, we need to communicate and work with the treasurer's office so that everyone is on the same page. We need the accounting records and the banking records to all match up, which has been an issue in the past. And so we've been working on that for the last quite a few months. I'm going to get an update from my folks on this just to make sure that we're still moving forward with it. I can't address the cashiering voids because management and budget would not be part of that component of the process. But as far as from an operating standpoint, if we have to void checks and things of that nature, we've been working with the treasurer's office very well to solidify that process and to get a cleaner process in place and running.
I'm on. I probably was on mute.
Okay, please proceed.
Yeah, so for the aspects related to the actual cashier's department, I know for certain in this period of time that they have revoked any of the cashier's voiding capabilities, and that although voiding may be necessary, it is redirected to management, and there is an authorization process, or at least a escalation so that it is processed. I would have to defer any additional details related to that to our PTA support, but basically that has been the preventative steps that have been taken since the time of the audit.
Okay, so
I believe that is the corrective action that would be necessary, because I think the problem is that cashiers were able to void transactions without any approval from somebody at a higher up, but it sounds like the changes may address it, but that would be something the auditors would have to address when they do their audit this year. But it sounds like the corrective action is in place, or will be in place.
thank you. Please proceed.
Okay, that was 6. Okay, we're on 2019-007. The county does not have procedures in place to ensure that all bank accounts were fully reconciled to the general ledger and that the reconciling item could be supported and the reconciliations were performed and reviewed timely, which could result in, without timely preparation, review of bank reconciliations and support for all reconciling items, the county could fail to identify errors and misappropriations timely. The recommendation is that the county should develop a bank reconciliation process involving both the Office of Management Budget and the Treasurer's Office to ensure bank reconciliations are prepared and reviewed timely. And this would both be Management Budget and the Treasurer's Office.
Matthew,
Budgets.
go ahead. Go ahead.
I apologize.
Go ahead. Somebody, Matthew, do you want to say something?
Please, thank you. Management and Budget agrees. We've been working with the Treasurer's Office. The challenge that we've had on this one is that we had a number of months of reconciliations under the old process. We had to go back and restart October. When we got to about March timeframe, we had to restart October, so we were about 6 months behind at that time. And we've been working to catch up. We're now, I think, about 2 months behind on reconciliations. The goal is to be back on track before the end of September, but likely is not because we were behind pretty much all year long. This will probably be a repeat finding for this upcoming audit.
You know, I appreciate what you're saying, and it's factual and everything, and I don't know why I'm thinking of this, but when you said you're talking about restart in October, I was thinking maybe you could restart 2020, but I'll leave that alone. It's for a different meeting. Just making a comment. Never mind.
Moving along.
Yes,
Right.
moving right along.
2019-008. The county does not have procedures in place to ensure that the inmate property bank accounts are reconciled to the jail management system, that reconciling items are occurring, the controls are in place over cash functions. Without the adequate preparation of cash reconciliation controls over cash functions, there exists a risk of misappropriation of assets. The recommendation is the county should develop a process to ensure that the jail inmate property bank account is reconciled to the jail management system. The cash reconciling items be reviewed for proper cheating to the state, that access to blank checks and the number of check signers are limited. And I just want to add on to this. This was the external auditor's finding, but our office is currently performing a performance engagement over the jail inmate property. So we should have that audit within probably 60 to 90 days. So we'll have more information on this, but these are the findings from the external auditor.
Okay. No comments? Moving right along.
The chair, I'm sorry, Colleen here.
Commissioner Colleen.
Yeah, I don't know what happened here in the Guardian building, but Zoom kicked me out and I can't get back in. On this item, is this also known as the commissary?
No.
Okay.
I'll let Samantha speak.
Okay, good morning. Samaya Harb, Director of Administration at the Sheriff's Office. No, sir, this is not the commissary account. This is the inmate property cash account. As the inmate come in or as the family puts money in their inmates accounts. That's the we're talking about.
That's
totally different, sir.
Okay. All right. Thank you. Yeah. Okay. I got it. Thank you. Thank you, Mr. Chair.
Moving along.
Yep.
Okay, 2019-009. During the fiscal year 2019 audit, the county implemented a mechanism to track program income earned by subrecipients and ensure that drawdowns of funds from the United States Department of Housing and Urban Development were net of program income received by subrecipients. However, the county did not report the program income to HUD and also did not report program income and expenditures of program income in the county's general ledger. Further, the expenditures of program income were not reported on the schedule of expenditures and federal awards, known as the CFA. There was no question cost for this, though. And the effect is that controls in place did not enforce a proper recording and reporting of program income. As a result, the CFA for fiscal year 2019 is understated by approximately $400,000. The recommendation is, in addition to tracking program income earned and ensuring that expenditures are properly netted with program income before drawing funds from HUD, the auditors recommended that the county implement controls to ensure that program income is recorded in the county's general ledger and reported to HUD, and that the expenditures of the program income are recorded into the general ledger and reported on the receipt.
Terry, you want to?
Yeah.
I'm sorry. You want to make a comment, Terry?
Yes, Mr. Chairman, thank you. We've adopted the auditor's recommendations on this. As you might recall, program income up until the recent change in the program model was received by the individual 34 participating jurisdictions. We've just now been able to get our arms around redirecting program income down to us, which you see in this report that the auditors have acknowledged that we've made some progress in getting that money back down to us, and now we have begun the process outlined in this finding to both report to HUD and their IDIS system, as well as put into the county ledger.
Thank you. Sounds like we're rolling in the same direction.
Yes, we are, sir.
Thank you. All right, moving on to now 2019-010. The county did not submit the required Section 3 summary report for the program year ended June 30th, 2019. Procedures and controls in place were not adequate to ensure Section 3 summary report was filed as required by HUD. The recommendation is the county implement a methodology such as a checklist or calendar reminders to ensure that the required Section 3 report is completed and submitted annually. And additionally, the county should retain documentation used to compile the data for the report. And I believe this is related to Ms. Terry Carroll also.
This is also a repeat finding. Again, by the change in the program model, we don't have the 34 participating jurisdictions going out and running their own activities. We're running them downtown, which gives us a better handle on the Section 3 requirements on administering those. So we've begun to administer those internally, as well as we had an employee designated in the SPEAR system. That employee left. We're in the process of getting another employee designated within the SPEAR system. We're in contact with them right now. They're telling us to go ahead and file the report for last year, 2019, which, as you can see from the auditor's report, we do have the information. We collected the information. We just did not file the report. So we will be in the process of doing that, hopefully before year's end.
Thank you. Ms. Cora?
Moving on to 2019-011, the testing from Plymouth indicated the county is not requiring subrecipients to provide the appropriate receipts in order to be reimbursed. There is no question cost. The effect is the county's controls did not ensure that subrecipients were following the terms of the subrecipient agreements and requesting reimbursement from the county. The inadequate monitoring of subrecipient compliance with the terms of agreement could result in non-compliance and question cost. The recommendation is the county should review its subrecipient agreements to determine whether there are essential terms that are not being followed in practice. If so, the county should evaluate whether the terms and conditions are in fact essential and whether the provisions require modifications, and then design controls over subrecipient payments and ensure all provisions are being monitored and met. And this one is related to the WIC program. I believe we've taken a lot of strides in the WIC program. We've gotten a lot better with WIC from the findings. So just wanted to state that. And I think Carol's online.
Hi,
Yes.
Marcy. This is Carol.
Good. Oh, Carol, how are you?
Good. How are you? Yes. And we have, when this was identified, yes, all the subrecipients now We are getting all of their itemized supporting documentation every single month, going through all of that, reviewing it. That has been in process since February. And so this finding has been, the corrective action plan has been fully implemented moving forward.
Thank you.
And that concludes the findings from the single audit. I don't know if anyone has any overall questions for me.
Commissioner Basham, this is Dave Helsick. I know Commissioner Colleen had asked earlier about the material noncompliance and its definition versus a material weakness. So I'm wondering if, not to put Shalana on the spot, but I will, if she could maybe go into a little bit more detail on the compliance versus a regular weakness as identified.
Sure. So material noncompliance would kind of be the highest level of finding we would have on the single audit, but versus being related to internal controls like the material weakness is, this would be a significant enough compliance with the requirements of the terms of the grant. So something that we've deemed to have a direct and material effect on the grant.
We appreciate that definition.
Yeah. Thank you for that from the auditors, Colleen. Just a quick question to the auditors. Is it ever in your experience in auditing that HUD begins to pull grants if there's too many findings? Do you run into that as auditors?
It can start to impact the funding levels of the grant or the kind of heavier monitoring of the grant by the funding agency if there are significant enough findings. There's no hard and fast rule to that. It's kind of up to the funding agency and kind of who you're working with.
Okay, and Mr. Carroll, are we getting extra scrutiny from Washington, as the auditors just alluded that they may in situations where there's lots of findings? Are we getting extra oversight?
Well, we're getting a bit of extra oversight. I'm not sure it's because of the audit findings. We're they're a little concerned at this point about not having closed out the NSP 1 and NSP 3 programs from over 10 years ago. That seems to be HUD's major concern right now.
Okay. Thank you, Mr. Carroll. Thank you, Mr. Chair.
And if I could just add, as we're concluding with the fiscal year 2019 audit, I'd like to thank Dave Helsick and the Plant Moran team for all the efforts they entailed into getting the audit completed on time. And also the audit could not have been completed without Matthew, Yogi, Shantika, and Michael Bridges within the M&B and all the other departments that had participated in the audit. So I think everybody's efforts will allow the audit to be completed on time by the state's filing deadline and before the pandemic really hit on May 13th. So thank you. And that's all I have.
Mr. Chair, do you need a motion? You're on mute, Ray.
He's on mute.
Well, I'm unmuted now. So yeah, I do need a motion to receive and file.
I will move to receive and file.
Do I have support?
Support.
Okay, I have moved and supported. Any further discussion on this item? Okay, all those in favor?
Aye.
Aye.
Aye. All those opposed? Ayes have it. Next item, Madam Clerk.
D, new business, there is none.
Next item.
E, such other matters as may be properly submitted before the committee.
There are none.
Public comments.
Is there anybody from the public that would like to comment? Second time, anybody from the public who would like to comment? Anybody from the public like to comment? Next item, Madam Clerk.
Adjournment.
Move adjournment.
Been moved and in support.
I'll support Dobb.
Okay, it's been moved and supported. All those in favor?
Aye.
All those opposed? Ayes have it. We are adjourned. Thank you.